Welcome to Neutral Voices In Depth. It's just me and you tonight, Jill. We got a good conversation. Tonight, we're going to be talking about financial institutions, which is something that's in the news right now. And for some people, they don't have any concerns. But overall, when something happens, you got to know there's going to be a domino effect that sooner or later is going to affect and hit us all in some way, shape, form, or fashion.
Absolutely. We talk a lot about the trickle-down effect.
Yeah.
So, you hear people say, I don't care. I didn't have any money, in that bank, or even if you don't have money in a bank, period. This isn't just going to affect the money in the bank. And that's what we're going to get into a little bit about, the trickle down of this, whatever what are they calling it? Not a fallout, but
they're seasoned banks.
Yes.
They're
big banks.
Big banks. Big banks. Now, the main ones we're going to talk about, we're going to go in a little in depth on a couple of them. But Silicon Valley, that has been in the news. That was one of the first ones that made the news over the last week or so. Then Signature Bank in the last couple of days. And Signature Bank is the third largest bank seizure in U.S. history. The third largest bank seizure in U.S. history. So, something's going wrong. And then there's Silvergate Bank. This is another bank that the government has went in and taken over. But Silicon Valley, it's a story behind that because that just didn't happen in the last 3-4 days.
Right, exactly. And some of the information that I found on Silicon Valley that I thought was absolutely just mind-blowing. So they are actually the 16th largest bank. At the end of 2022, so not that long ago, they reportedly had $209 billion with the B.
Billion
with the B dollars in assets. That was just at
you
the
said
209.
end.
209 billion total assets at the end of 2022 gone.
That was just 5 months ago,
yes.
6 months ago?
And on Thursday, so I think this happened, all of this happened last Wednesday. Mm-hmm. So on Thursday, people were lined up. I don't know if you saw any of the pictures or anything, but they were literally lined up. So on Thursday, these customers withdrew $42 billion. So as a result of those withdrawals, the bank actually was in the red, and the FDIC had to come in and take over on Friday.
Wouldn't you have been in that line to get your money?
Without a doubt, absolutely. But like you were just saying, this is something people are losing jobs over because this wasn't a surprise. They saw this coming. How do you have all that money less than 6 months ago, and now you've got people lined up to take their money out because you don't have any?
Yeah. How do bank? We're gonna talk about that later. But I agree. So my question is, why did the government or whoever took it over wait so long to go? There had to be red flags. At Wall Street, they know when people are doing insider trading or different, they get these flags. The SEC is, called in. Why didn't they respond to these red flags? Because this did not happen. Like I say, there was something you had to report.
Yeah.
There's something that had to happen that they knew that this was happening. Even banks have to report. So even somebody had to say something. They should have known this before this happened.
On a daily. And something that concerned me after the first. So Silicon Valley was the first of this
week.
Of this recent. So President Biden came on and told us all that we don't have anything to worry about. So I find it concerning because maybe if this just happened at Silicon Valley, maybe they just don't have their stuff together.
Right.
But to have it happen
3 times in less than a week,
2 more times, that has to be kind of concerning.
Yeah.
I'm
because what's
concerned.
Next? Everybody's what's next. And believe it or not, banks invest in banks. So what other bank is connected to these 3 banks that may, there may be some ripple effect that is going on to who's going to be the next one that's going to be affected by just these 3.
And, also something that was very interesting and concerning. At the end of 2022, again, pretty recent, in the industry, financial institutions, there was a loss of $620 billion. So compared to the prior year, the loss was 15. So you go from a $15 billion loss to a loss of $620 billion.
That's crazy.
Something
ain't adding up.
Something is not okay.
As the young people say, the math is not math.
It's not.
It's not happening. So that It's strange, but banks are. When did banks go from a service business to a business? Banks were set up to help people in different things, and banks are needed because,
Right.
believe it or not, you cannot store large sums of your own money in your home. If the police, the feds, anybody coming in your home, you might not be doing anything illegal,
Right.
but you have this large sum of money just cash in your home. They can seize it under the pretenses that they believe that it's something illegal.
Right. They want to know exactly, where it comes from. And even if you walk into a bank today with more than, I believe it's $10,000 cash, it will make you do a CTR. So basically a transaction report asking, where did this money come from?
Yeah. Yeah.
So I mean that's and of course that's to prohibit money laundering and all of
Right.
that. We realize that, but you can't have your own money at
No,
home.
no.
That's kind of
No, it's a certain amount that you can't travel with a certain large sum of money or anything, and if they think that it's illegal, say like you don't like trust banks and you want to go on vacation, so you traveling with $20,000, they're gonna be like, nah, you can't just travel with this $20,000. What is this $20,000 for? We're gonna seize it
Right.
for this reason because of suspicion or whatever. But but with banks, and there's generations now that don't use the traditional banks.
Yeah.
They use the Chime, the pay cards,
Cash
different
App,
things like
all
Cash
that.
App. So they don't. So they're not worried. But again, those things are going to change too when banking regulations change. There's gonna be a ripple effect that we might not think of today, but in the next 3 to 5 years, there's going to be some kind of ripple effect that is going to affect each and every one of us that bank. And with that, who do the banks benefit? Who actually benefits from banks?
Well, I can tell you who, the bank usually doesn't benefit. I found some information. Actually, something I did not know is Freedman Bank. You've heard of this.
Yes.
I'm absolutely sure that you have.
Yes.
In 1865, Freedman Bank was actually established to serve Black America until it came under control by, of course, white people.
Right.
So I found it rather interesting that a lot of these Black people lost their entire life savings
Right.
because the people who came in and took over this bank that was designed to serve Black people specifically invested this money and lost everyone's savings.
Right.
So then I went on to find that Black America makes up what, 14% of our population?
Actually, less than 13%.
Okay. So all financial institutions, how many of those do you believe are Black owned?
I would say
What percentage?
less than 1%.
1%. 1%. And it went on to even explain that the banks do not serve Black America well. We think about, we've talked about the fairness in regards to redlining. We've
Right,
talked
right.
about discrimination. So I found some reports from Forbes. These are from 2023. These are not from 1970. These are very current numbers.
Right.
First of all, 49% of Black Americans do not have a bank account, period.
I can see that.
49% compared to 15% of white people. So Forbes said that Black people are 2 times as likely to be denied credit than their white counterparts, regardless of their income. And this is actually in 2023. There are still lawsuits going on. So you ask who the banks do serve. I found who they do not serve.
When you say that, Wells Fargo, the actual Wells Fargo, if you think, I think it might have been 2 or 3 years ago, it might be up to 5, but the lawsuit is just really now getting settled because I got a little, it wasn't much, but I got a little class action lawsuit check from them. But what happened was Wells Fargo was opening accounts for people and using accounts, and they were like denying, and with Black people in general, they were denying them loans, but they were opening up accounts and other people. Wells Fargo was a mess. I don't know how they didn't get seized, but look it up.
Right,
Wells
right.
Fargo. I mean, and I know this because, like I said, you get that letter when the first class action
Yeah.
suit is filed,
Yeah.
and then they send you the $35 check. It wasn't much, but but I'm just saying.
Yeah.
But these banks, they do this. I mean, Wells Fargo, a prime example. Now, why weren't they seized? Because they were literally opening banks and other, and just doing, accounts in people's name and denying proper people because they were not giving black people business loans and denying them. So they went through several lawsuits at Wells Fargo alone. So, if I'm banking with you and you see I have money in there, why isn't it that I can, why can't I just get a loan from you? I mean, that doesn't make sense to me.
Well, and when you look at also that number of 49, so half
Right.
of black people don't have a traditional bank. So, but you also have to look at the demographics.
Right.
Look at for instance, the southeast part of town. Mm-hmm. How many different banks are there? Really, compared to, let's say, Southwest
Mm-hmm.
or North. So demographically, not just that, but I also look at the trust factor.
Right.
I mean, I can't speak, on your behalf, but digging into the history and looking at, freedmen, because who controls the banks right now if the black people don't? Who controls the banks right now? The same
people that control everything else.
Exactly. I mean, so it's got to be a trust factor as well.
And that's true. But you said the banks lost almost $600 billion in the last year.
Yes.
From 15 to 600. How are banks losing money? That's a good question because you go to a bank. They have a fee for I think they got an interest fee in most banks now. Right. I mean, you walk in, they charging you like a club. You got to pay a $10 interest fee to get in the bank. I mean, it's crazy.
Seriously.
I mean, you have NSF fees or overdraft fees, and there's a difference between NSF and overdraft. Overdraft means that they're going to cover you if you, and they're going to pay it out.
Correct.
What they cover. NSF means they're going to charge you for not having enough money in your account. But then they have inactivity fees. So if I'm just sitting and having my money there sit, just letting it grow, I'm going to get charged because I'm not moving it too fast.
Right.
Some banks are charging you an in-person teller fee, or over the phone teller fee if you want to talk over the phone teller fee. ATM fee. They make tens of billions of dollars from NSF or overdraft fees alone, and then another tens of billions of dollars from all these other fees. So if you're charging me for everything, how are you losing money? That just doesn't add up. That doesn't make sense.
And we were talking before we came on about how if you write me a check and you bank at Wells Fargo, the check is drawn off of Wells Fargo. I take it to Wells Fargo. They can literally look in there and see that Clarence has enough money to cover this check, but they still want to charge me $8, $9, $10 or whatever to unless I will open an account, and that is ridiculous to me.
Yeah. So you're charging me for my money,
right? That is in there.
Yeah.
And I actually have some numbers on the fees. So the top 5 financial institutions collected $27.5 billion in fees in 2022. The number one, J.P. Morgan, alone collected $6.92 billion in 2022 just in fees.
Just in fees.
Where y'all money at?
Where your money at?
Where's your money at?
And why is it? And trust me, I know it's the lower accounts. The regular people, the blue collar accounts.
Yeah.
I know they're not charging these people that got billions of dollars, which they can, but you'll get more charging them. Everything is built off the backs of the lower class or the not as affluent because they can charge us. And what are we going to do? What are we going to do?
Because if I didn't have $65 in my account to cover the check and then you charge me another $35, like how does that make any sense? Obviously, if I had the money in there, then the check wouldn't have, And then restaurants. If you are charging, we talked about that as well. If you are charging as a bank, the restaurants or the card services people for these fees, they are passing those fees, even if they don't tell you, disclose it, but you're still paying for it in the price of your salad.
Yeah. Some will tell you. Some mom and pops will tell you. If we're not making X amount of dollars, we have to charge you. So if you're going to swipe your card, it's going to be extra $2.25 to swipe your card because that's the service fee they're going to charge us. Some restaurants, mom and pop restaurants, because it cuts into their bottom line.
You cannot blame them. Yeah. But that's how we were saying it's a trickle down. It affects everybody.
And we were talking about, not traditional banks like Cash App and PayPal and all of that. Even when you use their money or you try to transfer it out, they charge. They charge you a fee. There's always a fee attached to it. How are you charging me to use my money. That just doesn't. And ATM fees. ATM fees are ridiculous.
Yes.
And foreign teller fees. Now, say like I bank at Three Rivers because that's a local, and I don't, but I'm just saying I bank at Three Rivers, a local bank. I'm in Alabama and I need to withdraw some money. I'm gonna pay up to $4 just to get my money withdrawn. But that's the $4 for that machine. Then my bank is gonna charge me another $2 to $3 a foreign teller fee. So these fees are just. So I'm wondering how these banks are losing money when they're charging all these fees.
And I think too, I worked at a bank in a long time ago, probably 1999. So I started out as a teller, and then I was a personal banker. So it was in Shipshewana. We served a lot of the Amish deal with cash.
Right.
The customer service was so on point back then that we had a place where they could pull their buggies up outside because they couldn't go through the drive-through, and we had a walk-up window. So it was so like personable, and that's what I see as a difference. Like you said, you have to pay to talk to a teller or over the phone. They charged me $9.50 the other day to use their restroom. No, I'm just kidding, but
I'm telling you, it's a common charge to get in there. That's how you feel.
You're charging me all this, and I can't even speak to you.
Yeah.
You want me to do everything, online. So think of the elderly people or people who aren't computer, inclined. Like all of that. The customer service is gone in the banking world. Right.
But another way a lot of banks are losing money is this crypto, because a lot of them were investing in crypto. This crypto, when it came out, crypto was this magic money-making thing. It was going to make everybody rich. Crypto was supposed to make you invest in crypto in another year or so. It's fast money. It's turning around. You're going to be a millionaire if you invest in my crypto now. Everybody was trying to get you to invest in crypto, pyramid scams and everything. Everybody was telling you, buy this crypto, buy this crypto. Well, here's the problem with cryptocurrency. One is it's not regulated. It's not regulated. No government regulation. Secondly is it's not set on a system. And what I mean by that is your crypto, you can set your crypto rates and your ceiling to whatever you want. I'm going to set my crypto and my ceiling to whatever I want. So, however you invest. So, once I reach a ceiling, and you got to understand, it's also an investment. So, once I reach or say, the investment peak or whatever, then I could actually cash out and you get nothing because it's not regulated. It's not insured or anything. Proof being, there were these two brothers in South Africa. They had a crypto. I think it was called AfroCrypt. It was Amir and Reese Saji. They set up their crypto investment platform in 2019. In 2021, these two brothers disappeared with $3.6 billion.
I bet they did.
Disappeared. Just pulled everything out, left all of their investors hanging. $3.6 billion. And that's what I'm saying. It's not regulated. It's not insured like the FDIC. Yeah. And the FDIC only insures up to 100, 200, 250,000. Yep. So that means that anything above that, they can't guarantee that. Right. But they're going to insure you at FDIC. In crypto, you don't have that cushion. You don't have that insurance. You don't have that assurance that you're going to get some of your money back. No.
So let me ask you this, because you sound like you're familiar with it, and I am not. So to me, it sounds like a very dirty business. What if it's not regulated? What is to keep me from taking your money and telling you, oh, well, it just didn't do well? So is the return on investment or the reputation so good and so high that it's really worth that risk?
Well,
it sounds like a dirty game to me.
It can be. It can be 3-card mining. I don't know if you know what that is. You pick a card, watch the card, follow the queen. Give me $5. You ever see that game? Oh, man. Well, it's that you got to follow it. Now, What keeps it from honest people? Like, if it's a legitimate thing and if people are honest, that's what's good. But anybody can get into it because anybody, you can legitimately, you or I can buy the equipment, and it's called farming. I can buy the equipment. I can buy something that can generate however I want to generate the crypto. You can do that. So there's no guarantee. And like these brothers, once they hit their platform, they did that. They was like, okay, see, disappeared. poof, vamoose, all the money. It's like a Madoff. It's like a modern day Bernie Madoff. It's smoke and mirrors. It's a pyramid scheme. Because what some of them were doing is that I'll get you to invest, then I want your mom to invest, but I'm going to pay you off your mom's investment to make sure, make it seem like you got this money quick, fast, in a hurry. But it was a lot of smoke and mirrors. And then, like I say, but when I got a threshold that I felt comfortable with, I'm pulling out and say, because it's an investment. There's no guaranteed return on your investment. So once I get your investment, I'm out.
Well, and two is, is crypto widely accepted now? Because I also feel like it's more risky as well, because crypto is fairly new.
Yes.
We've heard about it, but it's still not accepted at a lot of places. So, I mean, like I said, it just sounds like a dirty business, but you hear about it all the time. A year or so ago, it was the only thing you heard about as far as investments.
I don't know as in transaction how it is. There's things online that they say they accept crypto, a lot of online or digital, because, they accept crypto and things like that. Personally, I've never dealt with it, so I don't know the accessibility or acceptability of it. It's just not anything that I'm into. But with that, there's some stars. Shaquille O'Neal, Steph Curry, Tom Brady, soon-to-be ex-wife if they're not divorced, and some other people. They actually being sued for their endorsement of the FTX cryptocurrency, because the initial lawsuit said that because of their celebrityism, they were enticed to invest. So they got all of them in this lawsuit, which I don't feel is right, because if they wasn't running the business, then you can't. But they have them named in the lawsuit because, people, they lost out. And they got to blame somebody.
They do, but at the same time, like, that's an investment. I mean, you are anytime somebody wants you to invest in something, they're going to try to entice you, whether it be with, anything, but you still invest in your own free will. Like, they're just, like you said, trying to grab at straws because they're famous.
Yeah. But hey, and if you dealt with crypto, if you know crypto, if you're saying, you had a good experience, let us know. I just never have dealt with it. I'm just telling you what I've seen, what I've been reading. I mean, there's another gentleman right now that's going through, he fled to South America. Now they just extradited him. So it can be dirty. It's like, so you just got to be careful with all investments. You just got to be careful.
And I remember, back in the day, like, crypto started to be accepted and Bitcoin for transactions that were in fact illegal on the dark web, because it's not regulated, because it cannot be traced. So instead of saying, hey, if you want to buy this on the dark web, or if you want to buy this illegally, you have to pay with crypto. So I associate crypto just with being something sneaky or dirty.
Yeah, I'm not with that. But and you spoke a little bit earlier about banks and not being trusted by the black community. Financial institutions as a whole have, not been fair to the black community. Let's talk about like student loans. Think about it, student loans. Biden wants to eliminate student loans, which in Congress is fighting him tooth and nail. They're saying that he can't do this. But we bailed out Ford, we bailed out GM, we bailed out Chrysler, we bailed out banks, we bailed out this, we bailed out the airlines. The United States has bailed out every entity that they think that they can. But you can't help the common man, because student loans mess up a lot of people's finances because they stay on your credit. You can't claim them in bankruptcy. You got to pay a student loan back. So why not give them forgiveness?
And, one of the things and I'm glad you said this, because actually student loan debt has hurt the black community. A reason being, well, first of all, forgiveness could rectify the racial inequity, because sometimes we talked about the banks, we talked about loans. It's harder for them to even get access to the money to begin with. So you already have the wealth gap. Then they're starting out and they're already behind. Now they're even more behind.
And think about it, student loans, and because now I'm going to say this: I went to college. College is not for everybody. First and foremost, college is not for everybody. But the enticement of college, and they tell you have to go to college to get this degree, you got to get this. Now, I don't believe it's for everybody. But with that, that you're coming from already an impoverished situation. You're not getting scholarships, or you might get a partial scholarship. So you depend on those student loans.
Absolutely.
And which is funny, you will give me a $80,000 student loan at 18.
In a heartbeat.
In a heartbeat. Without any questions. But at 18, I come to you as a bank and I said, loan me $80,000 to start my business.
Right.
You're going to tell me no.
Right.
How can you trust me with $80,000 on this hand, but on this hand you say no?
Right.
That doesn't make sense.
Right. Or I want to buy a home.
Want to buy a home.
So in a lot of times, I mean, again, that is, I believe personally, intentional and, more intentional for some people in the community than others, just to kind of set us up for failure. It's apparent because, like you said, they're bailing out X, Y, Z, this and that. But when it comes to this, they are fighting. They are fighting on this.
Yeah, I mean, tooth and nail. They don't see this. But I guess, and I always say, if somebody's fighting to get something, they got an investment in it.
Exactly.
Somewhere, somehow, But student loans, it's a trap. But we were talking about fees, and we were just talking about banking fees. But that's not the only way they get us. Think about all the fees you pay. You cannot pay a utility bill without a fee.
Right.
You can't pay anything really without a fee. Credit card bills, whatever. There's a fee to everything. Think about, like you say, the NFL. If I didn't pay the $65 to cover that check. Now my light bill is X, Y, and Z, but you're gonna charge me an extra $3 or $4. I just got enough to pay my light bill,
right.
But I gotta pay in these fees, and they're feeding off the common person. The common person, and all of these are financial institutions. The common person, we're not gonna make it. We're nickel and diamond. Think about it. Gas is high. The food is going high, but we don't get the breaks, and that's why people are saying, well, these banks, I ain't have money in this bank, it's not going to affect me. Some way, somehow, in some sector of your life,
it is.
Sooner or later, all these banks collapsing, all of these financial institution changes and regulation, it's going to affect you somehow. Because think about it. You have money going somewhere.
Yeah.
You go buy these cards, prepaid cards. What are they? Like green dot,
like the net spend, the green dot. Yes.
Those are like crypto. Those are not fully regulated banks right now, so you don't know what what would happen if they crash.
And they could shut down at any time, and your money is not FDIC, insured. You can't even get, a lot of times with people, we were talking the other night with subprime loans.
Yes.
They will not even loan someone money without a checking account that is FDIC insured, because they want to make sure that they can pull that money out of that account. Exactly.
So it's crazy. And we've been talking about financial institutions and the pros and the cons. And again, it's not a bad thing. Know your banks. And everybody tell you it's best to do a credit union because it's member served and things like that. All you got to do is know your bank. Know the type of banks. There's credit unions. There's different banks. Banks are good. They're needed, but know what financial institution you're getting into. Know what they're about. And if you don't want to pay fees, credit unions don't charge as many fees. So you can go to a credit union. You can do whatever. Black people, we need to open more banks too. We need to stop. There's enough money in the black community that we can own banks. I think the one in Detroit or in Michigan, but I believe it's in Detroit. I know it's in Michigan, but I believe it's in Detroit. A black lady owned the largest black bank in America.
Yes, and that is I forgot what the name of it was. I had it down here. One United Bank is the largest. Bank. Yeah.
Yes.
So, it can be done. And another thing, too, when you go to the bank to open up a checking account, there's free checking. Pay attention to what you're doing. Depending on how many checks you're going to use, how many deposits you're going to make, that's also, a good idea to really see what you're signing up for.
Yeah. And get away from those fees, because those fees they're gonna nickel and dime you. They're gonna break you. We just need it, and it's sad that they don't look at the common people, and we get the fees. We support everything.
Yep.
But we want to thank you for joining us this far, Jill. I think we made it again. A conversation just you and me.
We
Look
did.
at that. We did.
Amen.
We're glad everybody joined us. But we're gonna be here tomorrow for Voice of the People. But we're gonna be out and about on the town. I think we're gonna be at A&J Optical tomorrow. So we had Miss Amber, correct?
Yep.
Amber here last week. So we're going to go and highlight her business tomorrow. We're going to be out there. So join us as we're out about in the town. And join us Friday for our mental health segment, Your Mental Health Matters. But Jill, I don't have Fikes here, but every night when we get ready to leave, what do we tell the people, Jill?
Remember to always protect your mind.
Thank you all. Have a good night.